Hello all, I hope that you have a great week so far. This is Calvin here again. Welcome to this weekly technical outlook on the major stock indices for the week of 12th July to 16th of July 2021. I'll be covering the usual trend bias and the latest key levels to watch on the various stock indices, which is the S&P 500, the Nasdaq 100, Hong Kong 50, the Japan 225, as well as the German 30 index. So before we start, let's take a look at the disclaimer slides. All right. So very quickly, let's look at the raw momentum of last week performance across the globe, from the US all the way down to Europe as well as Asia. So what we could see over here is a bit of a slight profit taking on the US stock indices. And bear in mind over here is that US itself, last week it actually traded only for 4 days because 4th of July is a kind of a public holiday for them, which is the observation of the Independence Day held on 4th of July. What we could see is a bit of 1 day off of performance, slightly lower than last week weekly return, but overall it's still positive. Yeah. So what we could see over here is the Nasdaq 100, which consists of mainly the big tech stocks or technology-driven stocks, are still leading the fort at 0.67%. Okay. Then what we could see over here is the small caps continue to disappoint or kind of a lackluster performance at negative 1.1%, almost the same as last week. So what I want to highlight over here is the bloodshed that was seen on the Hong Kong's major stock indices, which is the Hang Seng Index as well as the Hang Seng Tech Index. If you recall last week, those who actually followed my Twitter account, I've been updating on this situation in China where we start to see a fall in a bloodshed in China big tech due to this sell off in TT Chunxing, then spill over to the overall sector that actually dragged down the Hang Seng Index as well as the Hang Seng Tech Index. Negative 3.4% for the Hang Seng Index, and for the Hang Seng Tech Index is a negative 5.87%. Yeah, even though it's pretty red last week performance, but what we could see over here is that last week, especially on Friday and Thursday, actually fell off to I would say it's a significant support level as well. And right after it touches the support level, there was actually some we call it bullish tone start to come into the Hang Seng Index or the Hong Kong stock market, indirectly supporting the China big tech. Then, very interestingly, after the close of the market, we start to see the announcement of the China PBOC. So actually, all these we call it updates are really tweeted on my Twitter account. So those who actually follow me on Twitter, you can get instant update on what's going on in the market. Nikkei 225 negative 9.3%, also have a kind of a spillover effect in Asia caused by this China bloodshed, and more importantly, it's also a localized factor in Japan where we start to see a sudden resurgence of this COVID-19 Delta variant. Okay, so that actually kind of causing this kind of a demand potential negative feedback loop into the Japanese stock market via what we could see that potentially next down the road 2 to 3 months, we may start to see economic weakness given this resurgence of COVID-19. But later I'll show you technically, right, even though raw momentum is weak, but it managed to hold on to a key support level that we highlight last week on the Nikkei 225. So negative 2.3% for last week. German DAX almost unchanged, 0.24%. Okay, so if I were to wrap it up, last week weekly performance, what we could see over here is that the information technology is still one of the top three leaders at plus 2.3%, slightly below the consumer discretionary at 2.45%, and the real estate at 3%. That's last week performance. Overall, cyclicals remains weak. Industrial almost give or take unchanged, 0.41%. Materials 0.27%. Financials negative 0.83%, and energy negative 3.6%. Everything still accordingly to as our predefined potential Q3 outlook, which I highlighted 2 or 3 weeks ago, that we are actually expecting this kind of underperformance of cyclical, whereas high quality tech stock will actually now take the fort as a leadership role in the month in Q3. Yeah, which still pretty prevalent that we see the performance of last week. on the 11 sectors of the S&P. So if I were to drag it further, it's a rolling 1 month return, which is till 9th of July. Information technology is the leader, 8.1%, followed by consumer discretionary, 7.4, and followed by healthcare, 4.5 or 4.6%. So at the bottom of the table is where is your cyclicals, financials, negative 2.5, materials, negative 3.5, 3.6, and energy, negative 3.9%. All right. So now, key highlights I want to highlight is the economic data for this week, which is pretty heavy in terms of economic data release. So tomorrow, all these are Singapore time. Tomorrow we start to have a China balance of trade, U.S. inflation definitely important. Singapore Q2 GDP. Then you have a couple of central banks interest rate policy. RBNZ will be announcing the interest rate decision, which is we call it the Bank of New Zealand, Central Bank of New Zealand at 10 a.m. Wednesday. All right. Then followed by Bank of Canada interest rate decision at 10 p.m. Wednesday as well. Then you have the usual semi-annual Fed chair testimonial to Congress. So everyone might be listening. His hints about would there be a where where is the time that US got to temper and what's his view on the ongoing current inflationary situation. All right, so it's 12 a.m. Thursday time. So that's only part one. You have part two. He will actually do another speech again to different different bodies inside the Congress. Yeah, because in Congress itself there are various bodies inside. All right, so Fed chair will actually do another one with another another body being Congress at 9:30 p.m. Thursday. These are all Singapore time. So whatever he said on the first round, which is much more important definitely on the second round because more or less the message will be the same. All right. Then you have PBOJ, Bank of Japan interest rate decision, and this time they also released their latest quarterly outlook on, I would say they have a set of metrics on key economic Japanese data that were actually released like GDP or inflation rate. All right, at 11 a.m. Friday. Okay. Then definitely this week will actually officially, or I would say unofficially, kickstart the US Q2 earnings seasons, where the whole lot of the banks will actually kickstart their Q2 earnings out release. All right, and most importantly, in fact, before they actually release this week, okay, so I flash it off for a while to see for a while. So we have JP Morgan, Goldman Sachs, all the way down to Morgan Stanley, resulting their earnings this week. Then followed by actually one of the major chip manufacturer, which is Taiwan Semiconductor on Thursday. Okay, so I want to highlight is even before they release this Q2 outlook earnings for this coming week, 3 weeks ago, during some of the trade shows, certain bankers, I believe that a couple of few of them from Citi as well as JP Morgan and BOA, Bank of America, they actually did highlight a bit of negative guidance on their trading revenue. So that they highlight that Q2 trading revenue may not be so rosy as Q1. So it's very important to see that yes, earnings might beat, but what is the guidance going forward? Because it seems to me that this bank CEO has started to hint the market that certain parts of their revenue drivers may not be as rosy as Q1. Okay, so that's the key thing the market is watching about. All right, so now let's now jump into the technical chart of the various indices that I'd like to share with you all for this coming week and as well the key levels to watch. Okay, so first and foremost, as usual, I'll look at the risk proxy. I mean, risk proxy as in whether it's risk on or risk off for the global stock indices, as well as it actually relate to the global stock market health. So one of the global proxy that I like to always see is will be the semiconductor ETF. Those who actually follow me for quite some time, why I like it because it actually measures number one, semiconductor is actually the forefront right now in terms of 5G or in terms of high technology services and, and we call it a product. So if it's share price that is going up, it actually telling to us that there is positive feedback loop with the industry itself. All right. A lot of people may debate that due to supply chain issue, blah 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 blah. But most importantly, I want to look at sentiment because sentiment actually drive medium-term outlook of the stock market. When my medium-term outlook here is multi-week outlook of the stock market. Yeah, supply chain can be a longer term down the road. That's about if you are investing, it's different because technical analysis, weekly outlook, we are more concerned about the medium-term situation, which is more applicable from a trading perspective rather than investing. Yeah. So if you look at it over here, is that the firstly we take a look at this whole situation here, the major uptrend still remains intact from 18th of March 2020 low. Why? Because it's still trading a series of higher high and higher lows and holding above this orange line, which is the 200-day moving average. Okay, now acting as a support at 39250, which correspond to this former range bound situation in the semiconductor ETF, SOX in short, ticker code SOSX. So since 16th of Feb all the way down to 14th of May this year. So you're talking about close to about give or take 2.5 months of sideways configuration. Then thereafter, it did a strong bounce and attempt to actually shape a close all-time high on 29th June before a slight pullback. You could see the very strong reversal candle on Friday, holding above the 50-day moving average, which is also acting as support at 423.60 level, which is correspond to the previous swing low at 21st of Jan. So what we could see now is actually en route potentially to the next resistance or the next all-time high level at 458, and a break above 458 could take us up higher towards 495. So overall, what we could see over here is the momentum situation remains pretty positive, as indicated by the daily RSI indicator, holding above the key corresponding support at the 43% level slash 37% level. All right. So all in all, the iShares Semiconductor ETF, which is consists of the 30 big ETF, 30 big semiconductor stock listed on the US stock exchange, is still showing positive technical configuration, which i.e. telling us that from a medium-term perspective, multi perspective, the probability still skews towards risk-on behavior rather than risk-off, which translate to further potential upside in global stock indices. In general, I'll talk about in general. Yeah, some may underperform, later I'll share with you, but in general, it's still healthy. Okay, it's not the start of a medium-term risk-off yet, or even a major risk-off situation. Okay, now quickly S&P 500, quickly on the daily chart, so that you all could see a bigger picture. No change ever since the last test on the 18th of June, which is the 50-day moving average and the lower boundary of this major ascending channel since 23rd of March 2020 low. Overall, still inching higher. Next resistance to watch will be 44.50. All right. Then the 50-day moving average right now will be at 42, it's still at 42.50 over here. So RSI, nothing pretty scary, still kind of a bouncing up, still hasn't reached a resistance at extreme over an average extreme overbought level, which is at the 77% level, that we may need to be more concerned when they hit there. Why? Because it may kickstart a multi-week corrective decline within a major uptrend that is still in place since 20th of March 2020 low. Okay. Now, quickly flipping over to the strategy chart that I will share with you all. Still recall that last week we have a first resistance or a target at 43.60 already met, because last week it actually hit a high of 43.73 before over here. Okay, so the next resistance that I had last week is still 44.50/60. So today I added another resistance higher, will be at 45.50, which is the upper boundary of this short-term ascending channel that is in place since 5th of March 2021 low, as well as the 0.764, 0.764 Fibo expansion level as well. Okay, taken from the low of 5th of March, projected to the high of 10th of May, to the low of 21st of Jan. Okay, so RSI still pretty healthy on the shorter term. Nothing telling us that indicating to us there might be a reversal in terms of momentum. Okay, so still no change. I don't want to tight the medium term pivotal support to so tight, because they're using 42.50. Why? Because 42.50 is also correspond to now the lower boundary of this short-term ascending channel. Okay, as well as the 50-day moving average. Okay, that is holding previous dip pretty well. Okay, since 27th of January 2021, give or take. So still no change, still using 42.50 as my key medium-term pivotal support, looking for a further potential push up to actually test the next resistance at 44.50/60. A break above 44.60, which will potentially open up scope towards the next higher resistance at 45.40. Okay, now the Nasdaq 100, the outperformer. So what we could see over here very clearly, a strong acceleration of this medium-term uptrend ever since the breakout of our this predefined 40/40 upside trigger level. Okay, Daily RSI also hasn't hit the extreme overbought level yet at 80%. So still doesn't the risk of a medium term setback or medium term multi-week pullback or corrective decline seems to be lower at this juncture. So the next resistance will be at 15110/300. So on the 4 hour chart, this will be our strategy chart. So what we could see over here is it's now coming very, very close to that resistance that we highlight last week, 14,950/15,130. So what I could do over here is that I will actually tighten the key medium-term pivotal support slightly higher a bit to actually correspond to the lower boundary of this short-term ascending channel since 13th of May 2021 low. So I'll tighten it up to 14,480 from last week level of this 15 from last week level of 15,000, I think 200, something like that. So 14,480 will be my new medium term pivotal support to actually maintain this ongoing bullish bias for the Nasdaq 100. So still looking for a further push up to test 15,130. A break above higher should take us up to this Fibo expansion cluster level at 15,300, which is so close to the upper boundary of this ascending channel. Okay, the short-term ascending channel since 13th of May. Now, moving on to the Hang Seng. So this is what happened to Hang Seng. So Hang Seng, last week, we have this lower boundary resist support level at 28,000/27,600, which is the swing low of 25th of May, 25th of March, pardon me, to 13th of May. Okay, so last week, it actually, or last Thursday, it actually did what I call a waterfall slide. Why? Because of this ongoing regulatory clampdown on this China big tech company. So you can just take a look at my my Twitter. I'll just share with you all my opinion on that. Okay. So what's interesting over here is yes, despite it breakdown, it actually came down and hit close to our alternate target. That means if this range support level breaks, what is the next support level to watch? Which we highlight last week at 26,650. So why is this level important? Okay. So if I were to share with you, if I could actually zoom out to the daily chart, so what we could see is that this level here, 20,650, is actually very close to the this range, this former range resistance here that was acting as a previous resistance since 7th of July and also about 27th of November last year. And also the lower boundary of this long-term major uptrend that is still in place since 19th of March, which is the long-term ascending trendline supporter that one highlighted in light green, which is corresponding at this 26,650. And if I zoom into the 4 hour chart, it's also the 0.764% Fibo expansion of the recent decline from 18th of Feb all the way down to 25th of March, projected to the high of 1st of June. So this gives us at 0.76.4, which is exactly at the lower of last week, which is at 26,860. Okay, slightly above the 26,650 mark. Okay, so what we do over here is the RSI on the 4 hour has started to exit from the oversold region, okay, and still showing potential to actually evolve higher towards over here, which is the overbought region. So what we could see over here is I will actually yes, yeah, even though it break 28,000 slash 27,600, which was last week key support, but it actually tumbled down and hit very close to the next support level. This is where it allows kind of give me to actually have a situation to yes, still because if I were to turn bearish down here, at most the next support level to watch is 26,650. All right. So instead, I will use 26,650 as my key medium pivotal support, like I highlight in the daily chart, which correspond to this major ascending trend line from the 19th of March 20 low, indicating to us that the major uptrend still remains intact. So what I could do over here is that I will use this level here as my key medium-term pivotal support for this week. So if we start to see a breakout above 28,000, at least a daily close above 28,000, we could reinforce in terms of probability for a further push up within the range. So to the back up towards the upper boundary, again at 29,570, which is this range top that is in place since 12th of March 2021 low. Okay, so but however, if we have a daily close below 26,650, then we start to see a continuation of this decline to actually test the long-term pivotal support at 26,000 slash 25,570, which is this is the weekly chart that I share with you all. It's part of the weekly chart, which is over here. All right, the long-term pivotal support, which correspond to the former descending triangle, a descending trend line resistance, major one since 12, since January 2018, now turns into a pullback support at this level as well, 25,760. All right. So yes, that's I have for Hang Seng. So watch the 26,650 level, 26,650 level on the Hang Seng index or the Hong Kong 50 index that we call in our platform. Now going on to another Asia indices, which is the Japan. So I'll highlight why, even though Japan, yes, last week showed a kind of disaster performance on the raw momentum, but where it actually bounced off from our key medium-term pivotal support, which is the 26,500, 27,500 on the daily chart. So why is it important? Because like I mentioned, it's the 200-day moving average, as well as the former swing low area of 29th of Jan to 12th of May, and as well as the 23% Fibo retracement from the 16th of March 2020 low all the way up to 15th or 16th of Feb 2021 high. So indicate to us that hey, technical elements are still showing that medium term is more of a sideways configuration since it's 16th of Feb 21 high, which is the 30-year high. It been consolidating in the kind of descending expanding wedge range, or whatever you call it, a very complex range configuration, close to about now give or take 5 months or so, but still holding above the 200-day moving average. So indicate to us that in terms of probability, the major uptrend in place since 16th of March low remains intact, which is last year. And also right now, the daily RSI now has started to bounce up after a test on its oversold region. Okay, so what we could see here is there's a strong bullish price action after a test on the 200-day moving average, which is positive, which is also that test on the 27,500 level that will be highlighting for a couple of weeks already, okay, in our medium-term outlook, which is our weekly outlook. So still no change. 27,500 will be my key medium-term pivotal support to watch for this week. So still looking for potential bullish bias in any dips within this complex range that is in place since 16th of Feb 2021 high. Potentially now a potential push up to test this 29,600 upside trigger level, which is close to this previous resist ceiling over here, and also this descending range, medium term range resistance from 16th of Feb 2021. All right, so still using 27,500 as a key medium term pivotal support, still looking for that push up towards 29,600 for now. Okay, unless we have a daily close above 29,600, then we could potentially validate further potential up move towards 30,490. Right, in the first step. So short-term RSI as measured by the 4-hour RSI, short-term momentum, pardon me, as measured by the 4-hour RSI is pretty positive, I would say. Why? Because it started to bounce off from a significant support level, which is at the 15% level, which is possess an extreme oversold level, and also a breakout of this former descending resistance. All right, and we still have a couple of room to maneuver before hitting the extreme overbought level at 82%. So all in all, short-term upside momentum seems to be kind of supportive for a further bounce, at least potentially to test this resistance level at 29,600 in the first step. Okay, now moving on to the German DAX. So German DAX is kind of pretty flattish after its 14th of June all-time highs. Okay, because previously as a yeah, over here the 14th of June all-time high level at 15,805. So after hitting this fresh all-time high level, close to about give or take around 4 weeks, 3 to 4 weeks, it has been trading sideways. But what interesting is that this sideways configuration managed to hold above the 15,400 mark, which is also the 200-day moving average, and also that former resistance over here turns into a pullback support, which is at 15,400. So what we could see over here is that daily RSI also holding above a corresponding support at the 42% level. So if you go to the strategy chart, still unchanged. So what we have last week was the excess of 15,200, slightly below 15,400 that we defined 3 weeks ago. So this will be still my key medium-term pivotal support to watch for this week. So I don't want to tie it up. So unless you could have a clear break above this minor descending resistance that's in place since the fresh autumn high level, the current autumn high level of 14th of June 2021, which is now acting as an intermediate resistance at 15,720. All right. So unless you could have a 4 hour close above 15,720, then I could actually potentially tighten the key medium term pivotal support to 15,400. So for now, still remains no change at 15,200. Still looking for, because we never know that it can still be consolidating within this kind of it seems to me like it's like a symmetrical triangle configuration. It could be inside this symmetrical configuration for another week or so. Okay, so unless you have a clear 4 hour break above 15,720. So still no change, 15,200, looking it as still maintain that key medium term pivotal support for this week. Uh, Overall, as a whole, we're still looking for a potential upward trajectory, potentially to test the next resistance at 16,070 slash 16,200 for the German 30 index. All right, so this is the 4 hour chart. So all in all, what we could see over here is that the medium term outlook for the US major stock indices still looks pretty healthy on the bullish side of the story. So their medium term uptrend still remains intact. So still looking for another level of fresh potential all-time high for this week. Then for Hang Seng Index, yes, last week was a kind of a very a bad weekly performance, but it actually bounced off from a significant support. So this week we still potentially look for a potential test that range top that range resistance. If we could see at least a daily close back above 28,000. All right. Then for the Nikkei 225, no change, still holding above that 27,500 key medium-term pivotal support, which is the 200-day moving average. So still looking for that potential push up within that complex range configuration that is in place since its 31-year high, or 31-year high, which is the February high this year. Then for the German 30 index, no change as well, still looking for a further upward trajectory. If we start to see a break from this minor symmetrical triangle range support resistance at 15,720, then 15,200 will be the excess medium term pivotal support to watch for this week. So with that, thank you for your time, and I see you next in my next video.